Now, of course, nobody is really thinking about interest rates and where they bottom out in the future. That, of course, is because all of the focus around the world is on how high are these interest rates going to have to go in the United Kingdom, the United States, Europe, Australia, New Zealand, etc. How long will they stay up there? Well, hello again, everybody. The Reserve Bank met expectations this week by raising the official cash rate by another 0.5%. So it now sits at 3.5%, whereas a year ago we were sitting at that record low of 0.25%. I think it just pays to remember that the low interest rates of the first part of 2021 and 2020 reflected some unique events. First of all, we had in 2019, the Reserve Bank cut interest rates to record lows, the official cash rate to 1%. That was because they were worried about deflation, falling prices. New Zealand's inflation rate averaged only about 1.2% from 2012 through to 2019. So totally the opposite problem they have at the moment of inflation being excessively high. And then after they had already cut those interest rates in 2019, then we saw the global pandemic come along, the lockdowns, closing of the borders, and so they cut interest rates again with the cash rate going then to the record low of 0.25%. Now, unless we get that unique set of circumstances again of these two sort of serious things in a row, it's really not reasonable to expect that when interest rates start falling again, we're going to go back to those low levels. I really don't expect to see 2.99% 5-year fixed mortgage rate coming back again. Now, of course, nobody is really thinking about interest rates and where they bottom out in the future. That, of course, is because all of the focus around the world is on how high are these interest rates going to have to go in the United Kingdom, the United States, Europe, Australia, New Zealand, etc. How long will they stay up there? And then at the end of that, it's the thinking about, well, when do they start coming down? And if you've been watching the financial markets over the past few weeks, you'll have seen some huge volatility. We've had the extra tightening of monetary policy in the United States and very strong signals from the Federal Reserve officials there that they're really going to hammer things in order to make sure no one has any doubt about their willingness, their determination to get inflation back to 2%. And that was pushing interest rates up in the wholesale markets and feeding through to the same thing in New Zealand. And then, of course, we had this irresponsible, badly timed easing of fiscal policy in the United Kingdom, worries about a debt blowout, interest rates are taking a new sort of step upward there. And thank goodness that in the banks in New Zealand, we've got enough people who've been around long enough that they've seen similar sorts of periods of volatility in the past, so we haven't seen them chopping and changing their fixed mortgage rates up, then down, then up, etc., as has been happening with the likes of share prices up and down, all these sort of things. The bankers like to see where things seem to be settling down before then they will initiate changes in the fixed mortgage rates. And in that regard, the changes in some of those policies in the United Kingdom have been positive. We've also had a bit of a sign of maybe some labour market weakness in the United States, which has led to the fixed borrowing costs for New Zealand banks now essentially going back to where they were before we saw that mini budget in the United Kingdom. Rates are still well above where they were in the early part of August, and after that we saw new inflation worries. Who knows what the next few weeks will bring in terms of inflation, disinflation surprises. So just be very careful not to over extrapolate whatever the most recent piece of news is you hear on an overnight or on a weekly basis. My view remains that for New Zealand interest rates, there's further to go. Looks like the official cash rate is going to go to 4.25%. Some people are picking 4.75%. To me, that feels a little bit high, given some of the restraint that we can already see out there in the economy and internationally. But that's where the fall in the Kiwi dollar is interesting. With interest rates rising overseas, the likes of the US currency goes up, our currency goes down, that boosts our inflation rate. That's a way in which the tightening of monetary policy in the United States actually leads to some extra tightening in New Zealand. So we'll see how things go. If I were borrowing, I'd probably still be looking in the 1-year fixed period and maybe with a little bit of a 2-year fixed interest rate cover as well. But we'll see what happens over the next few weeks and months. All the best out there.